Hey, good to be back. Welcome back, everyone. It's good to be here. My name is Ed Ponsi, your FX educator here on behalf of FX Street. Hey, got some different people in the room today, so just start you off with this. It's your room, folks. If you have a question about anything, technical analysis, fundamental analysis, risk management, setups, whatever questions you have, feel free to get them in there. And I'm more than happy to try to get the answers out to you. Again, it's 8 a.m. here in New York City. There's a lot going on here. There's a massive number of earnings coming out being reported in the U.S. as we speak. Some of the really big companies in the U.S., like Coca-Cola, Johnson & Johnson, are reporting earnings. Intel, after the close today. Just Goldman Sachs has reported earnings. Just huge market-moving stuff, and you're actually seeing some movement in the currencies. Yes, this does affect the currency market. You get a lot of reports right at the top of the hour, so at 8 o'clock, probably a whole bunch of numbers just hit. So if you're looking at, say, Euro-USD on a 1-minute chart, right, you see that? This is probably earnings related. All right, that sudden move, that's a 1-minute chart, so you're looking at 2 minutes worth of activity. Now, that's only like 6 or 7 pips, but look how much bigger the candles got. Look at how much sudden the movements became, and that's probably earnings related. So earnings do create volatility. We get good numbers from Goldman Sachs, good numbers from Johnson & Johnson, good numbers from Coca-Cola. And plenty of companies had bad numbers, too. There's 17 out of the S&P 500 are going to be reporting today as it is. All right, so anyway, so if you do see these unexpected moves in the market and you're not sure why, a lot of them could be due to earnings reports. And the thing is, here's how we look at it, is that if you get really strong earnings reports in the U.S., that's actually bad for the dollar. Why? Because it moves you a step farther away maybe from QE3. But on the other hand, if you get really bad numbers out of the U.S., the dollar is likely to get stronger overall because, again, it points toward global recession, global slowdown. The numbers look bad, for the economy. Some of the individual companies look pretty good. But the economic numbers overall in the U.S., China, and Europe don't look very good at all. And, so really everybody's looking at Bernanke today. 2 hours from now, you'll get a massive jolt of volatility, very possible. Why? Because you're going to get Bernanke speaking in front of Congress today. This is huge. Right? Anything that hints toward QE3 would cause the euro to skyrocket. If he does not hint at QE3, the euro could plummet. It's that kind of what we call a binary event. It's all or nothing. Flip a coin. What's your edge if you're trading this event? What is your edge on a coin flip? I would say you probably do not have an edge. All right, and so if you're entering trades now that are U.S., especially U.S. dollar-based trades, in anticipation of making money on this, I would say, listen, you may have something good going on that I don't know about, but I would suspect that there's a little bit of a gambler mentality at work there. Okay? So just be careful. You don't want to be too much of that gambler mentality. You could get your ears cleaned out pretty good by Bernanke if you're on the wrong side of the trade. And it's really what we call a binary event. It's either going to go way up or way down based on what he says. Okay. If you do have any questions, please feel free to get them in. I see Boyke's in the room. Boyke's in the house. All right. Just taking a look here at your current Euro USD, one of the things you might notice is that we do have some short-term resistance here. In other words, this was the lower low right? And this was the turning point right around 123 back in early June was the turning point for a big reversal in euro. And that of course, became a flag pattern, bear flag. We broke down out of that bear flag, and there was some optimism in the meantime, but then that optimism went away. But what I'm trying to point out to you is this area here was resistance, was support rather. It should act as resistance now. Let's go to a 4-hour chart. Might be a little bit more visible down there at that time frame. So we'll go to that shorter frame. You can see that level coming into play here, right around 123, huge reversal. And since then, what's been happening? Resistance at 123. This is a pretty big deal. Now, we did look at the COT numbers briefly yesterday, and they did indicate that there's about 165, 170,000 net short position. That number means contracts, 165, 170,000 contracts net short. That's a pretty big deal. And so you could be setting up for a short squeeze here is my point, especially if Bernanke says something very, that hints toward QE3. You could really see this pop. That looks like a double bottom to me on the 240-minute chart. That's a 4-hour chart. This resistance level is very clearly in play at 123, the former support level. I'll knock it down to a 1-hour chart. I'd like to start from the higher time frames and work down to the lower ones. It's pretty much standard operating procedure around here. All right, there you see it, and that, listen, that could vary. That could be described in a variety of ways. It starts out looking like a head and shoulders, like a head, left, head, right. It's not, it's very sloppy. It could also be considered a cup pattern in here. The handle has not formed yet, so maybe it still needs to form a handle. But it does look like a bottoming pattern here in the short term. In the short term, I expect the euro to move up. Of course, it's all dependent on Bernanke, so it's kind of hard to play that. But if it does move up, I'll probably short it, right? You want to be, in other words, I can't catch every move, but if this does move up sharply today, the euro is still junk, in my opinion. I mean, it's still a currency that's in a tremendous amount of trouble. So if it moves up, and if it could move up into this area here and form a lower high, then it will be time to short. I don't want to go long, though, because the trend, I'd really be going against the trend here to go long. And if Bernanke disappoints, then this thing hits new lows very quickly, I would think. Back below 122, you're testing these lows from last week, I think, fairly quickly if Bernanke disappoints us. And, everyone assumes that they're going to get some kind of stimulus. Just look at the euro. The euro's up over 100 pips. Aussie's up over 100 pips in the last 24 hours. A lot of these currencies have moved up. Why? Everybody's expecting something. If they don't get it, they're going to go right back down. And if they don't get what they expected, they're going to fall. Let's take a look at Aussie. Aussie looks an awful lot stronger than the euro, doesn't it? It's the daily. Go back to euro. Lower highs, lower lows. Aussie? No, sir. Aussie looks like a rather large rounded bottom pattern with higher highs and higher lows. Okay, and getting very close to old resistance. Getting very close to testing. That's around 103.35 right here. And we're maybe 50 pips below that right now. So if Bernanke disappoints, the euro probably falls more than the Aussie. If Bernanke does not disappoint, the euro probably rises more than the Aussie. Of course, one of the trades we've been focused on lately is euro against the Aussie, because it's not so much of a binary trade, right? It's not like a huge binary event where it's either going to go way up or way down, which is really kind of the way that we feel about anything against the dollar right now. Bernanke's at 10 New York time. That's 1 hour and 50 minutes from now. So, if you're in New York, no matter where you are, it's 1 hour and 50 minutes from now. If you're in New York, that's 10 a.m. Right now it's about 8:15. So about an hour and 45 minutes. And this is really the big event, right? They're still getting around it. I mean, CPI comes out in 20 minutes. That's a big event, but it won't be as big as it usually is, right? One of the things I want to warn you about with the Bernanke, if you're really convinced that he's going to tell you something good today, keep this in mind. I'm going to take you back a month. See, a lot of people aren't paying attention to everything that he says, or this was easy to miss, I should say. You could have been paying attention, you still could have missed it. This would have been easy to miss. This is from a month ago. Bernanke sees diminishing quantitative easing returns. Fed Chairman Bernanke said Tuesday, more asset buys will be on the table, but acknowledge for the first time that they may produce diminishing returns. It's important, the first time. So he's saying, hey, listen, it's not going to, it's not going to fix everything. And it's like injecting a drug. Every time you inject it, the effect is less and less. All right, so if we hear something like that, the market might find that very depressing if they hear that today. By the way, just a quick peek. Look, I just want to show you, these are all the companies that are reporting earnings here in the U.S. today. It's ridiculous. Okay? And probably a lot of them are going to be warning about going forward. Slow economy is going to hit everybody. Economic calendar. First of all, ZEW, right? Economic sentiment. Yeesh. Negative 22.3 this morning out of Europe. It's not good news, but it really doesn't matter. It didn't really hurt the euro because it's all about Bernanke, right? CPI coming up in about 15 minutes, looking for 1.6 year over year. Looking for flat month over month. And if you take out food and energy, looking for up 0.2. This is usually a big deal, CPI. It might be less of a big deal today. Okay, there's actually a ton of data coming today. So 8:30, you've got CPI. 9 o'clock, 45 minutes from now, tick data. How much money, it's a very important question, how much money is flowing into the U.S. from overseas? The U.S. needs that money to keep flowing in order to do what? They need the money to flow in order to keep the dollar afloat. All right, so always follow the money. That's a big inflow of capital. We'll see. It's been getting smaller, though. That's 45 minutes from now. 1 hour from now, we get industrial production, month over month, and capacity utilization. That's if you took a factory and you said, okay, how much of that factory are you using? If you're using 79.2% of the factory, right? Well, they measure how much of the factory is being used, because the more of the factory that is being used, the stronger business is, right? If business is really good, you got to hire extra workers, you use more of the factory, maybe you put in a third shift, and then when the industrial capacity gets up near 90%, you might have to build a new factory. No danger of that happening right now. Bernanke testimony, 1 hour and 45 minutes from now. It's all about the Bernanke testimony. So all this economic data definitely matters, but nothing matters more than Bernanke. And then you get a housing market index also coming out at the same time as Bernanke. So it's going to be buried in data today. okay, especially over the next hour and 45 minutes. You're going to be utterly buried in data, and then you're going to have Bernanke on top of it. All right, so let's take a look at dollar Swiss. Frank wants to take a look at. Let's take a look at that one, and I also want to take a look at Euro Aussie as well. Let's take a look at dollar Swiss. First of all, when I look at this chart, I see an uptrend. I want to take advantage of that uptrend. So there are a variety of ways that I could do that. First thing we'll do is we'll fire up some moving averages. Now you can see here, that's the 10-day moving average. That was actually the low of the day today. The low is 97.50, the moving average 97.53. So really you could say the moving average is the low of the day on dollar Swiss. This is a nice uptrend. It's a nice little pullback in a trend. But the 10-day doesn't really help me that much here because the price is not using that as a support level. Another thing that I could do is I could flip that from a 10 to a 20. Right there's your 20-day. And again, you know, it's tilted upward and everything like that, but it's not acting as support or resistance. So we have to look for other ways to get involved, right? But the main thing that I want to point out is that, you know, if I'm looking at a chart that's moving upward like this, if I'm looking at an uptrend, then I probably want to go long. All right? I don't want to sell this short, especially I have lower highs. I have higher highs and higher lows. I don't have lower highs. I have higher highs and higher lows. And that's good. So I want to be a buyer. I want to go to a shorter time frame. Let's go to a 60-minute chart. What are you really looking for on the 60-minute chart? You're looking for the dip. Relative Strength Index, or RSI, is a good way to seek that out. And right here, for example, you know, there was a buy signal overnight. 1 in the morning, the buy signal occurs. I'm going to miss that one. All right, but if you're awake for that, how do you play that? All right, let's take a look. Let's walk through. Let's walk through that. Let's make that the hard right edge of the chart. First of all, there are sell signals here too, right? But we're going to ignore the sell signals, correct? And the reason why we ignore them is because they go against the trend. Now, Frank's in Singapore, so while this buy signal occurred at midnight for me, it actually occurred at noon probably for Frank. So maybe, you know, 1 in the afternoon. So maybe Frank got in there. I don't know. You don't have to say anything, Frank. It's, you know, that's your business. But you can see that we're way off the highs, right? The highs were around 98.70. The buy signal occurs down here, more than 100 pips off the high. Well, that makes sense, doesn't it? You're in an uptrend. You want to go long 100 pips. You want to go long, but you don't necessarily want to buy at the high. Maybe going long 100 pips underneath the high is better than buying it at the high or as it hits a new high. There are various schools of thought on that. Not everybody agrees, but I think it makes a lot of sense. I think it makes a ton of sense. Okay, so we have our buy signal here. Let's do a little walkthrough, a little game plan here. Make that the hard right edge of the chart. Well, imagine that's happening right now. And I'll pull up a data window. What you're really looking at is the RSI number. So the price is coming down, and you know you want to buy on the dip, but it's telling you not yet 35 RSI, not yet 34 RSI, not yet 30 RSI. You're waiting for these candles to close, and you're finally going to get one to close right here. This little red guy. Candle closes, RSI is 29.09. See how the color of the RSI changed? We're under 30 on RSI, and that means, what does that mean? It means does it mean it's time to buy? No, it does not mean it's time to buy. It means it is time to get ready to buy. Because this price could continue falling here. We don't know if the next candle is going to be up or down. But we don't have to know, right? What we're going to do is we're going to wait for RSI to turn and come back up above 30 and close above 30. Very important, right? And if it closes above 30, then then it's go time. Well, right here, the green candle, RSI closes at 34.84. That means now that this is closed and it's closed above 30, we can go ahead and hit the buy button. The buy button is going to be the open of the very next candle right here. And I'll put a line there. You call it 97.70 for the buy. The low of that candle is actually 97.68. But remember, you're paying the spread, and my chart's running off of an average of the bid and ask. So a couple pips higher. 97.70 is your entry. Okay, that's to enter. So we'll make that arrow green. The green arrow. There's got to be a stop. That stop's got to go under the low. Let's make that arrow red. How far under the low is the question. You do want to give it a little, you certainly don't want to put the stop at the low. You've got to go beneath it, but how far beneath it is always the question. Hang on one moment. Okay, how far beneath the low is the question? First of all, what is that low? The low is 97.53. There you see it, 97.53 and 0.2 of a pip, right? So the low is 97.53. What I'll normally do, I'll subtract 10 from that. That makes it 97.43. I'll subtract the spread. Spread's probably what? 2 pips? Maybe 3? Let's say that it's 3 pips. That takes you from 43 down to 40. Then I'll round it down to the next 0 or 5. So let's say 97.35 is going to be my stop. 97.40 would be acceptable too. But you're talking a stop of either 30 or 35 pips. And I'm going to put that stop. Let's go at 35, 97.35. So it's a 35 pip stop. I do not consider that a wide stop. And the stop disappears because it's off the screen. But I'm entering at 70. My stop's at 35. I'll tell you what. My stop's at 35. My first target's going to be 35. Puts my first target right about here, 98.05. You can see that first target has not been hit yet. We're about 25 pips away. There's the stop. There's the entry. There's the target. You're hoping it gets up to here eventually. And you're going to need an additional target on top of that. This looks pretty good to me up here. That's about 98.65. Now, that's a very obvious target. Anybody could look at a chart and say that that's resistance, right? So because that target is very obvious, we're going to cheat just a little bit. We're going to push it down just a little bit. So if my entry is 97.70 and this target is 98.65, that's a 95 pip target for my second target. 10% of 95 is 9.5. Round that to 10. I can bring this down by 10. So instead of 98.65, I'm going to go 98.55. Right there. There's my second target. Now it's no longer so obvious. I'm not shooting for the top of resistance, which is important, right? If you're aiming for the obvious point, then you're going to encounter a lot of selling up there, and that selling may prevent you from getting out. It may prevent the price from reaching your target. So instead of taking that chance, we'll just say, all right, we'll get out ahead. We'll sacrifice that last 10%. We'll take 90% of our target, right? We'll take a profit at 90% of the target, and we'll let everybody else fight over that last 10%. Because believe me, the last 10% is the toughest 10%. That's been my experience, okay? So make my target a little bit easier to hit. Now, if I can just make it to that first target, which is 98.05, then my stop is going to come up to break even. My stop will come up to match the entry point. All right, if I hit that first target, I close half of the trade. I'm playing with the house's money. I move my stop to break even. What have I got to worry about, right? I'm in good shape now. And this makes it easier to stay in your good trades, because if you're like me, you know, I've never really had a hard time cutting losses, but I have always had a hard time making the most out of my winners. And one way to really let those winners run, if you do have trouble holding on to winners, one way to make it easier is to make them smaller. In other words, reduce the size of the trade. By reducing the size of the trade, you actually make it easier to stay in. It's less pressure on you. Also, moving that stop to break even does wonders for you psychologically. Okay, that's going to put an end to the first session here. Very good session. I hope you enjoyed it. I'll be back in 1 hour with the next session. All right. And stay tuned, because you're going to get CPI in just seconds from now. You're going to get CPI. But, of course, it's really all about Bernanke. I'll see you back here in 60 minutes. Everybody take care. Bye-bye.